Howdy, howdy, Casey. As always, first, give me a sec. I'm posting on Discord. Howdy, Casey. As always, first, give me a sec. I'm posting on Discord. That's wonderful. I forgot to mute myself. Even better. That's perfect. So now we get reverb. Repeating myself, or so it seems. All right. So we got that done. We got that done. So yeah, we have a screen. Yo, Andrew. Hello, hello, hello. Was worried about you. I am truly worried, but I think I shouldn't be. But yeah, I sent you a DM. Hope you're good and safe and all that great stuff. We are about to get started right away. You know what beautiful time it is today. We're gonna go into the analysis. We're also gonna drop a couple of droplets of talking about the fundamental situation, the fundamental story where we're at right now, which is kind of arguably abnormal, but we'll see, We're about to close the gap SPX from June 4th. Yeah, I'm seeing we're actually, first of all, we can officially say 7,533 has been kicked out and we filled that gap in. So this one is kind of, arguably, again, you want to keep the line, but you get the idea. This one has been filled. Right now, we're slightly above. As you can see, we're kind of testing the very same levels. We're slightly above, but we're testing the very same highs as we have had before. We're below previous highs. We're filling in the gap that we have from the 26th of June. From the 4th of June, sorry. Casey, you were right. That's the year. Again, so that 4th. So arguably we don't have any more gaps left behind, I think. Have we filled in the gap? Let's see how close we are. We're right on top of it, right below it rather. But we haven't filled it in, I would argue. Let's lock it in. Yep. Move that here for a second. Make it just a little thinner, just for convenience. We're just below it. I mean, we were very close to filling it in, but we have not yet. This is something I warned about. The market does tend to insist and go back and fill in gaps. Arguably, gaps are not the motive of the market to do so. And yet, then again, it's so to the broader market, to the sort of general observer, that would look as if that is the case, especially when we will fill that gap and end up reversing. That would be quite evident. Now, pardon me. Now, does that necessarily mean that the market really insists on filling in the gaps? No, really, there is a technical reason, and there are technical levels that the market tends to care about a lot further, a lot more than the specific gap points. More so it happens because of the robotic systems. The bots nowadays identify various easy targets, if you will, and once they have the capital to execute them, they kind of pick up the trend for themselves. And well, as you can see, the momentum right now is still bullish, but starting to fade off. Let's go over the time frames per usual to understand where we're at and where we're headed. So let's look at 1 minute. 1 minute right now, we're within a framework of an uptrend, or so it seems, at least at the moment. Real close, literal, mere dollars, arguably a couple of dollars below our filling our gap. I would say that this will probably look bullish on the 5 minutes, and given how close we are, although we had a lot of close calls with this, as you guys saw before, we had a lot of close calls filling in that gap, but we never did. So let's see how things appear this time around, whether they were more bullish or reversing. 5 minutes before I skip over, we're objectively right now bullish within bearish territory, basically closer to oversold, almost right below that 20 mark. Look right above me, you'll have a bit of a breakdown on how stochastic RSI functions and how we should read it, basically. And the idea here is that we're kind of getting a mixture of the forces. It's neither bullish nor bearish. It's, as we said, bullish and bearish territory, kind of a disadvantaged bullish. So in other words, most likely sideways. So we're not breaking down yet, even though we're seeing that sort of convergence back and forth. We're basically going to remain what appears to be moving into this wedge, at least for the time being. Let's confirm that on the 30 minutes. On the 30 minutes, we are, well, appearing to be running high. Read right above me and you'll see what that means when we're running high. When we're running high for some time, it is far more likely to see a reversal sometime soon. But that will happen only when we're going to actually purge all that bullish momentum that was within the system. Arguably, I thought that we're going to have a little bit more of a bearish looking sort of day, that we're going to start to see the reversal sooner. But since the market decided to run up higher and did feel that 7,533, 7,584 gap at the moment still is objectively bullish, although we're kind of seeing a mixture of the forces. What does that mean in simple terms? It seems that it's far more likely than not that we will see a price action that will lead to the filling of the gap, the 7,584. So we still have a little bit more enough energy to stay afloat within that range. Given that we are so close, it's far more likely than not that this will end up closing, given how we are more so bullish on the 45 minutes. It's a decent increment of time. We have 13 more minutes before the current candlestick gets locked in, and arguably we have another one that appears to be still bullish to some extent. Let's see, our hourly is still bullish, which has an entire 58 minutes to go. So it's far more likely than not that we will see a little bit more bullish price action moving towards 7,584.32. Again, that's not my opinion. It is merely what the market is telling us right now. 4 hours, we actually are still bullish, but are starting to see some signs of reversal, potential reversal. Let's examine that. In reality, we saw there was kind of a downwards tendency that played out within the framework of the last sessions last week. But this week we picked up and we are far more bullish than we were last week. So right now we're kind of staying within the framework of the wedge, just as I warned we may end up being. This very range played out as a support. We kicked up slightly higher than expected. I expected us to see more of a reversal towards 7,533 to keep the tendency of the downtrend more afloat. Right now, it still is a downtrend. Objectively, we will see, but it is having a neat correction, and so, well, relief rally of sorts. So it is what it is. Now let's examine the daily, because the daily will be far more indicative of what we're about to see in the following days, not just today. Those who misunderstand and think of the daily as a way to read only what today's session will bring. In fact, just the other way around. All the smaller time frames that we were looking throughout the 4 hour, 1 hour, 45 minutes are far more indicative of what we really have throughout the following session. The daily is more indicative of what we're about to have in the following days, which currently is an interesting mixture. We are neither bullish nor bearish. As you can see, we're kind of having this mixed behavior. We are bullish, but in bearish territory, but we're bullish objective and transitioning above the 50. So it appears that in the following sessions, we will become more bullish, which brings about the question, are we really headed into a rally, or are we still having a breakdown? Is the market still looking downwards, or is this starting to look more and more like a rally? Now, objectively, this is a little bit weird, at least for this stage of things. Why? We're seeing another interesting reading because we're having a very swift, sharp convergence, crossover of the forces on the weekly, which we did not see last week. We, of course, said we still have some time before that bearish momentum shifts over and becomes bullish, but this week already, we're seeing a shift over. And so, technically speaking, those who are not seeing what I'm talking about, as you can see, now I blew up the RSI. We are now objectively seeing an injection of bullish liquidity, a lot more buying than selling, and that's why we're seeing a crossover of the forces. which of course we're seeing being quite evident in the price action itself. The question still then remains, are we still bullish or are we bearish in the bigger, broader picture? Well, again, getting mixed signs. Objectively, on the monthly, we have actually transitioned and we have starting to see more bearish signs over the longer period. Basically, if we measure the price action over the longer period, we're going to identify that we're no longer getting the same volume pushing higher as we did before. So realistically, on a longer scheme of things, we are losing momentum. Not swiftly, but we are. In fact, it is quite evident in the arguably sideways price action that we're having right now. We're obviously entangled with the ceiling, with the top range of the current channel we're working our way within the framework of. Although we are kind of teetering on the edge of it, and I've been arguing that we're going to fall back down for quite some time, and we're still delaying. Now, here comes the fundamental story portion of today's session. A while back, I would argue through 2 to 3 months, one of our members in the academy, in the university, in Greg's Technical Analysis University, named Polina. Those who know Polina know exactly who I'm talking about. She raised a very interesting point and said that in her mind, she can see how Trump will try to drag the markets by its nose, one way or another, into the midterms. At that point, and of course justified it with some technical facets, which we are maybe potentially seeing playing out, maybe not. We'll see. We'll debate that in a minute. The bottom line is, the closer we are getting to midterms, and the way the price action is playing out right now, I would be a fool to say that it is not completely impossible. Now, saying that Trump will drag things out to midterms does not completely negate us having more of a downtrend altogether. But objectively, given how the price action is setting up right now, and especially if we pay attention, because there is convergence between the narrative, the story, the fundamentals of the geopolitical story that is playing out, and how the technicals oftentimes are indicative of what is up to come. Technicals oftentimes, the way they play, the way they work is that the more liquidity that is transitioning into one direction or another, can it be, more silent, more sort of behind the scenes, where you see the institutions are transitioning to more of a sell position rather than a buy position, which is indicative of a major correction or a crash of sorts. And we have been seeing a lot of that recently. A lot of institutional selling. It's sort of silent shifting over. And remember, I always keep things objective, the same way when we saw this decline, I told you there will be a correction upwards right following it. We didn't expect it to be that high, but there were signs already ahead of time of it. And right now, most of the signs were pointing towards us moving lower, towards a neckline point, a building up what is known as a head and shoulders, a harmonic pattern, which supposed to lead us towards maybe the low ranges that I'm finding right now, or earlier, 5,800. 5,900, but in reality we were expecting to see more closer to 6,000, 6,100. There are various strong support and resistance levels around 6,100 that will probably more likely play a role, rather than a higher 59 range. But right now, we are seeing the price action staggering, not really starting to see a drop. In fact, as we said, we're seeing more of a sideways move that is moving within the framework of this wedge that we knew about a while back. We were speaking about it multiple sessions before, how the price action is right now basically moving into this almost triangle-like formation, a flag of sorts, those who know harmonic patterns. But there is a but. By now, and especially now, the way the weekly pattern is working out, because remember, we still are objectively below the 20, which means we are in bearish territory, oversold to be more precise. That means there is more. It's not bullish. Do not misread this. This is not bullish. In fact, objectively, we're having a lot more bearish momentum, bearish liquidity in the system right now that we had before. But we are having a cool down. That means we're no longer having as much bearish momentum as we had before. It still is bearish, but not as bearish as it was before, simply because we are below the 20 range, and normally we can and will continue a downtrend if our broader, bigger picture is bearish, which it is. But the very same thing that we just said, opposing, right? The same way we are bullish in bearish territory, objectively, although in neutral zone, anything between the 50 point and our 80 point, in essence, although considered to be more neutral than, of course, bearish, but still is in the higher the variable, the higher we are and closer to 80, the more indicative it is of a bullish momentum in the broader picture of things, the broader moving average and accumulative price action behavior. So this is twice the mixed sign. In other words, we are now still bearish, yes, but in neutral bullish territory. In other words, it is still not objectively bearish in full swing, but it is becoming so. So there becomes a question, what is more powerful? Obviously, since we're looking at a moving average of a handful of months when it comes to the monthly chart, we are predicting at least the following month, since we're just at the beginning of it, and the following potential month to be more so bearish than not, given what we see right now. Again, not in full swing bearish, but more bearish than not. And so, since we can be bearish for far longer in this instance, or potentially are going to be bearish for far longer than bullish, we will see a more of a downwards tendency. The potential culprit for our support and a retest will be, as before, the nearest 7,384.45, simply because it is just that close to us. It is right below where the price action is right now, and if we're going to start to see a true decline instead of a breakout upwards, right, we will see more of a tendency of breaking out of the wedge towards the downwards direction, again towards that very support, 7,384.45. In fact, maybe even more so, pushing right through it, and maybe even having some slippage that is more indicative of the market pull in the down direction. Okay, so we're basically right now at a crossroads where the upcoming weeks, days, in fact, will be very indicative of where the price action is going within the following months. And so, although we are seeing more of a bullish session today, at least for the time being, we got to keep in mind that the broader picture is and was becoming more bearish. We had a temporary correction, which weirdly enough, I mean, again, the market doesn't count time the same way humans do. We trade from day to day, so to speak, or pay attention to the market day to day. But in reality, the market works in broader cycles. And so what we are seeing, again, on the monthly is indicative of the behavior into the broader cycle and not into day-to-day ebb and flow price action, which arguably does not, on its own, is not indicative of where we're really headed in the long run. Those who are traders, for them, of course, this day-to-day price action is extremely important. You need to understand where your entry points and your exits are. But if you're looking at a broader movement and you understand that there's a broader correction to be had, you better be aware of such alarms that are going off right now as we speak and are warning of an impending correction that can initiate. Although, in fact, we're seeing a bullish session today, it can even start today. Although not very likely given the behavior and what we're seeing on the smaller time frames, that is a little bit more bullish still. We got to stay objective, but the broader picture is bearish. And so we got to ask ourselves, Greg, if we are saying that the current price action is the broader picture of the weekly. So let's look at the broader picture of the quarterly, which we were looking at just last week, which did appear to be a lot more bearish. And this week still is bearish, as you can see. But in fact, as we have seen, more so a belly indicative of a continuation and broader, very prolonged downtrend, which is part of what we're relying on to this actually plays a major role into the overall broader structure of what I'm expecting to see, that head and shoulders. Is this price action that we're seeing today currently is indicative of a complete reversal, and will this change over? Well, that depends. So the quarterly basically right now is up for grabs in a way. The more bearish momentum we will see in the following sessions, which will spill over into our monthly, will be far more indicative of a broader picture correction, the same way I'm saying, or opposingly, it will be saying, no, Greg, we still have more fuel to go to the upside, which was part of the argument of Paulina's idea on how the market will play out in the following months. We both now in agreement about Trump, and the market seems to be dragging this out into the midterm elections. And arguably, I would say that Trump is also trying to play his cards in such a way. Again, I'm not going to go into the whole argument of what I think Trump is doing, because this guy literally goes back and forth every other day, from all-out war to we're just signing the deal. We're just signing the deal. I simply cannot take his word anymore seriously, because it appears to be some sort of a facade, some sort of a misleading act on purpose, whether it's to annoy the IRGC, whether it's prolong some benefits in the stock market, affect America's economy in the broader scheme of things, hold off impending higher energy prices. Various variables can be part of that narrative, and I don't want to argue that I know which one makes the difference. I do know and understand that the war is far from over, and again, arguably, those who are aware, it is still in full swing, whether it's Israel's Lebanese front, or Lebanese-Israelis front, if you will, whichever one, doesn't matter. I mean, the fight is the fight. Hezbollah is still Hezbollah. Hamas is still waking up, and although there are some voices from all around saying that they're planning to disarm, right now it's only planning. We will see. Usually they end up sabotaging any good effort that comes from the Israeli side, and just use it as a prolonging measure, as a postponing measure, the same way Trump appears to be using right now. His Twitter X account, and so on, wherever he posts Truth Social, his own, Arguably, I would say that it is appearing to be more and more likely that that's exactly what's happening, and Trump is trying to prolong these various variables to staying afloat and steady and stable before midterm elections, because it appears to be he cares about these a lot more than he pretends that he does. And although he says that oftentimes on the media, on various interviews, he says that he doesn't think that will affect the public's opinion. I would argue that the public nowadays is so weak and shifts its opinion on a dime, and can go from seeing things one way to another within literal hours, if not days. And so I'm not going to be surprised myself if Trump right now pretends that he doesn't care and is not worried, but in reality he's a lot far more worried about the outcome of midterm elections than he's pretending to, and so is playing his cards in such a way that he's going to have the highest chance of not being impeached. Now, realistically speaking, I do think that the price action, given the location of the cycle, which is very important. If you're not aware of the cycle, of course, a lot of these things will not necessarily mean to you what they should, because it's very important to understand where we are in the cycle. Otherwise, your judgment will be impeded by the day-to-day ebb and flow. In fact, oftentimes in the academy itself, I like to equate this sort of behavior to when a shark is asleep. A shark is asleep and is still moving. Why? The shark does not have active filtering gills. It's basically, it does not breathe back and forth. It needs to have more water sort of flowing through the gills, fresh water, oxygenated water, in order to be able to breathe. And so if a shark stops, it basically chokes to death. So the market never really stops, it never goes flat. The market doesn't go, doesn't flatline like an AKG if somebody dies, God forbid, but you get the idea. The market goes flat in exactly this form or way. It kind of fluctuates and has higher volatility, but within a band instead of being on a diagonal in a diagonal range, basically, which we are observing right now in the recent weeks. But I would argue that this is very indicative of maybe a prolonged process that I may be wrong about. Maybe this is indicative of a miscalculation on my behalf. Again, technical factors are basically a mathematical equation of various factors brought together and forces that can be used to analyze where the market is having a broader movement to the upside or downside. Again, we don't try to time the market. Timing the market is, an unrewarding exercise, if you will, very unrewarding exercise, because we know the very same processes at times can take, X amount of time, and the very same process can take Y amount of time. So we don't try to time the market as much as we try to identify various processes that need to happen and happen cyclically within the cycle, repetitively rather, in the cycle, and so are indicative like a landmark to know where we are at one stage or another of the cycle. And it appears to be that we are at a more later stage of the cycle, which in essence is normally a lot more bearish. This time around, given the delay and how much money was lost during COVID, and a lot of the money managers right now are trying to make up for it and avoid a chopping block. Right now, they're trying to make as much as possible before the major correction, major drop happens. Greg, you've been saying that for quite a while, right? We don't care about while, time is time. In fact, arguably, if you pay attention, we are now seeing more so sideways price action and a breakdown. As you can see, these processes can at times last a handful of months. In this instance, for example, 1, 2, 3, 4 months before we saw true change in direction. And we're right now on the third month, just getting started. So in fact, we may still see another month of delay before we initiate that move downwards. Now, objectively right now, we're seeing mixed price action and mixed momentum, which I gotta stay objective about. You guys know, no matter, I have my own preference. I do prefer the market to initiate that drop for my position, for the market to sort of filter out and be over with this process so we can actually go full on bullish, which normally takes quite a while and is a prolonged process. But I can tell you that right now what we're seeing is more so a sideways price action rather than bearish as was expected by me, and I gotta stay objective about it. If we're looking, for example, look at our smaller time frames, although the 4-hourly right now, and it feels also bullish because you woke up and you're seeing this rally today and it feels bullish altogether. No, really, not necessarily. I would argue that very quickly, within no time, within the following session, in fact, maybe towards the end of today's session, because we still have an hour and a half before this current candlestick gets locked. And in fact, I would surprise you, within the following other candlestick, which is not even going to be fully used up because we have only 2 hours out of the whole thing, 2.5 hours of the whole thing. Basically, we still may end up seeing a downtrend. We're following right that bullish candlestick, and in fact, seeing price action that will lead all the way back to where we started the day at. We've seen that price action happen before, the same way that sometimes the market drops and corrects throughout the session right to the point of starting. The same way we may end up seeing the price action later today correct to the very same point where we started and sort of maintain that downwards tendency. Arguably, I would not say that within the framework of the following hour and a half, I don't think we're going to correct the entire candlestick, but I would also argue that I don't think this entire candlestick will remain as is, and we're probably going to see a bit of a pullback that will lead it to go to its lower 7,500s, maybe closer to that, where 7,533 maybe, and maybe even below it. even within the framework of the current candlestick. Will we eat away the whole thing? I don't think so, but I would argue that I think that we at least should expect a 50% correction on the following candlestick, given how momentum, yes, the one that we saw on right now, right here, is bullish objectively, but it will not remain so for long. In fact, the longer we prolong and sort of squeeze out the remnants of, the far more indicative it is of a correction. People like to think that if we've been bullish, then we're going to be bullish, and if we've been bearish, we're going to be bearish. In fact, it's kind of the other way around. If we now had a swift, strong movement to the upside, we're far more likely to see a swift correction sometime soon, even if not immediately followed by, but sometime soon. And as we're seeing, we've been running high for quite some time on all time frames that are below the 1 hourly. Within the hour time frame, that matters because, of course, we're not going to look at 1 minute or 5 minutes, because those are going to shift over back and forth. The 1 minute and 5 minutes are indicative of what's happening inside of that little price action inside. So it's kind of, yes, it's going to become bullish and bearish back and forth multiple times, but we got to see the broader picture and understand that it's far more likely that sooner or later, in fact, I would argue probably sooner than later, we're going to have convergence, a crossover of the forces here. Bearish strength will take dominance and will start dipping lower and lower, which will bring that thing hold down. As you can see, even the momentum here was lost throughout, sort of squeezing it. So it's not going to hold. In other words, I'm sorry to say, it's far more likely not to hold and just be this push over and break down. Greg, why are you saying that it's so bullish right now? I bet my yes, that's what will happen. You know, if I'm wrong, I'm wrong. But that is my opinion. I'm far more expecting to see a major correction downwards sometime soon, in fact. I know. Oh, it's going to take some time, Greg. Oh, are we there yet? No, jump out of the window then. Ooh, if you are so impatient, it is what it is. The market, in fact, is a mechanism of transferring wealth from the impatient to the patient. In my humble opinion, we're now seeing actually the ceiling, and it's just a matter of time until we start breaking back down. So I've explained it throughout this session today, how it is that right now we're bullish, but on a broader scheme of things, don't be surprised if very, very shortly we're going to see the price action basically shift over and not just fill into that wedge, as we said before, because if you're misled by what I said before to think that we're going to squeeze to the absolute depth and going to go all the way to the corner, no. In fact, once we complete the processes that are necessary sometime soon, the market will simply flow downwards simply because it can, and that's the overall flow of the direction. You can't argue with me that this current sideways trend that we have been within the framework of in the past, arguably 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks, 13, 12 weeks, depends on how you want to see it, depends on how you want to measure the entire range. Arguably, in fact, I would argue maybe even 15 weeks, depending on when you argue that we entered this territory. So we've been in this area for quite some time. Don't be surprised if today's session is not the last. And we're going to have a couple more within that framework. Like I said, working our way down, maybe still retesting this range and only then breaking further deeper towards our 7100. And I, in fact, already warned my Academy members, my community members, and here I am warning you guys on the broader YouTubes. And I hope you guys take this very seriously. And because again, people will now laugh at it. Oh, Greg, look, tomorrow, no break. Today, no breaks. Market, no break. You wait. When the market will break, you'll come back crying. What do I do now? So be smart, analyze. Don't just trust me because I say so. The very same way I said don't trust Tom Lee and the various, bullish talking heads you get on Fox, CNBC, and so on, Bloomberg, you name it, right? So realistically speaking, I would argue you guys need to remember that things will play out in such a way that it is very misleading right before it's kind of, the darkest before the sunrise. And that's just the reality. So sometimes the most misleading, so the price action can be actually indicative of that the actual directionality we're going in. So be very, very attentive. Love the suit. Thank you, bro. I appreciate it. Yes, today we're less casual. Today we're more casual. Today we're more casual to how the YouTube's videos usually are. Today I'm missing the tie. I promise to you next time I will wear a tie. Um, wasn't lazy, was just too very preoccupied, busy analyzing the market, running from calls to calls. As you know, I'm human. By the way, days I don't post videos or anything. If anyone thinks I'm just sitting there lazy, not doing anything, no, I'm working intensively with my members, with my community, individual members who are in the Greg's Technical Analysis University. If you want to know more about it, definitely join my Discord. The address, the Patreon, right there. It's in that direction, so you can join and you learn that I've been posting and warning. For example, here it is. I've been warning that we, in fact, just earlier, I've been warning how we're probably going to end up testing 7,533. But the bigger picture is, in fact, don't say I didn't warn and say, I think I might have skipped it, but we are about to be moving towards 7,100. I mentioned that to my members and warned them about it even before I talk about it on YouTube. Yes, we post various things, discuss geopolitics. Of course, everyone are welcome to throw in their 2 cents, news and everything in between, jokes, and of course, charts. And nonetheless, as you can see, warning about 7,533 just recently. But also still 7,100. Here we come. And yes, I do mean it. I know it's very hard to see given the price action right now. I get it. But hey, later don't say that you didn't know or I did not warn about us moving in that direction. I know today's price action is very misleading and appears to be bullish, but hey, that is the beauty of being able to analyze the market and predict that although we are seeing bullish behavior, we still are about to correct in a major way downwards. That is it, ladies and gentlemen. And yeah, that's it. Really consider everything I said earlier about Trump prolonging and dragging things out into midterms. That's definitely a possibility. And yeah, that's it, I guess. And so that means again more of that sideways. Even though I'm saying we're going to draw back down, we may as well still see another correction to the upside before a completion of the process and fully breaking down. I would argue that we're at the edge of the cliff. Be very, very, very attentive, because this process did not have to be this long, and neither does it have to take longer to initiate a major correction. So be very, very attentive, and I would highly recommend those who are not familiar or know how to properly analyze the charts, I recommend learning so. That's it, ladies and gentlemen. I'll see you on the next